1 minute, guys. We did it. We're live. Happy Friday, everybody. Hope you guys are all doing well out there. And I'm hoping somebody can get us started with some gratitude this morning, something that they're grateful for. I love starting the show this way. Who's got something for us?
I'm grateful the warm weather has returned to Florida.
So I hear that there is a what's called a polar vortex. That I guess the North Pole can like tilt on its axis, and that's what we're experiencing. And I guess we got potentially like another 7 to 10 days of this polar vortex. So the Northeast is going to be cold for a while. So Angela, stop with your what is it down there in Florida? How cold?
We were 80 degrees yesterday and 80 degrees today.
Yeah. What are you complaining about?
I am
we're gonna
very grateful.
yeah, we're gonna see single digits here at night. So we'll see. We'll see. Anybody else with something to share before we dive into Finance Friday here? Well, let's do it. Do we have our friends Dan and Eric on this morning? I see Dan and I see Eric. Awesome. What do you guys got for us this Finance Friday?
Morning, everyone. It's Eric. Trying to get my camera to work, but for some reason it's not working on this laptop. So gonna have to just have a voice today, it looks like. But yeah, I think the biggest thing that stands out to me, is obviously, I have a team, and then I also kind of help oversee a lot of other aspects at Semper. The biggest thing I'm seeing is, which is a positive, last week of January here, I think we've seen probably more contracts come in, people go under contract for a new purchase than we have in the past, I don't know, 8 to 10 weeks, in a 7 day period. So the good news is it seems like activity is way up. It seems like we're really building for that spring market that we all talk about in the Northeast. So it's a positive thing, really seeing a lot of activity. So something to get excited about.
Yeah, I definitely think, we're seeing the same thing. A lot of activity, applications are up, people are out. Anything in particular you're seeing with regards to programs or the rates? It just seems like I think the Feds ruled the other day. They're just going to kind of hold things steady. So I don't think we're going to see much happen. I don't know if you're seeing anything, if you could give us a summary, what happened to rates over this week?
I think the biggest thing we see is, even if the Fed's not making a huge change, a lot of different economic data can come out that can impact the bond market and help things. Um, we as mortgage people, we watch the 10-year bond. I'm pretty sure everybody looks at it all day long. We have, MSNBC, CNBC, Fox, all the TVs in the office are all on all day, and we watch the tickers. So we definitely been seeing the bond go down, which has a significant impact on better rates. So it seems like we're starting to trend in the right direction.
Dan, anything that you're seeing you want to jump in? You're muted if you're trying to go, Dan.
Oh, sorry about that. Unmuted. Yeah, so definitely seen some positive movement in rates the last couple weeks. Really, on some programs now we can get into like the mid sixes on like FHA right now. Conventional is always going to be a little bit higher, but if we've got like a decent FHA buyer, we're somewhere in the mid sixes now, which helps for affordability, especially with a lot of what our client base is first time home buyers. So even a shift like that in the rates can help, where it moves someone from who might have had a $300,000 pre-approval to maybe help them get to 325, closer to 350 or something like that. So the rate movement's good. As far as programs, nothing really new across the board that's come out. Pretty standard as far as that goes. However, Rhode Island Housing did did offer an additional $1,000 grant on top of the standard down payment assistance programs that they offer, that are all, on either on a repayment base or on like a silent second type program where they're not paying it, but they're still taking a loan out. They have $15,000 or $20,000 options through Rhode Island Housing, but they just came out with an extra $1,000 grant. It does have an income limit of about $90,000 for your household, but if you're in Rhode Island and we're buying, it's a free $1,000 if they're already doing a down payment assistance program.
Awesome. Anything that you guys have seen over the course of the past week with regards to a transaction that you're working on, something weird with a borrower, something happened, you had to get creative, or just something that the agents could learn about, experience, if it comes up with one of their buyers, they can just be aware. Anything weird on a deal that might be a good share for the group?
Well,
I,
yeah, so
go
I've
ahead,
got
Dave.
one for you, kind of backtracking on what's almost been a common theme on these Finance Fridays, but talking about condos. So we had a condo in process here for a while, and the HOA had been really kind of just tough to deal with. They were in the process of transferring over to a management company to maintain their records. So it was really a big challenge just to get everything. But then we got it all, and we got it all submitted. This particular deal went through Rhode Island Housing, and we ended up finding out that there were some old deed restrictions on there that our basically our buyer's attorney was able to reach out through the Providence Housing and get a release of these old deed restrictions. But it just goes to show sometimes these things come up in the process of a condo that you don't necessarily anticipate, but we figure it out along the way and navigate it and get it done. So in that particular case, it was a matter of researching the deed restrictions that were there and going the appropriate route to get them released. But that was one not everyday issue that I was able to get resolved this week here for one of my clients.
Cool. Adam, I see your hand up. And also, just guys, as a reminder, when you're joining the call, please make sure your screen name has your name in it. So if you do have your hand up, I know how to refer to you. I see just a couple of screen names that aren't your actual name. So please check that when you're jumping in on Zoom. But Adam, go ahead. You're muted if you're trying to go.
How about now?
There you go.
All right. So I'm out in my lanai last night grilling some Greek chicken, and two finance things come up at 8:30 at night. And I said, this is like the world telling me I got to share this. So first question that kind of came up was, we actually had the seller, but the buyer kept asking for payment of the rate lock extension. So seller's got a house, not closing on time. Hey, we still want to close, but you got to pay for our rate lock extension. And it's getting to the point now where the deal might fall apart. And the question was simple. It was, is there an actual cost to the buyer or the lender if the deal falls apart and there's been several rate locks, quote unquote, purchased to lock in the rate? So I called the lender that I felt comfortable calling at 8:30 at night on a Thursday, and he said, no, there's no actual charge. And I assume that's nationwide, not by the bank. But the other thing he said was, you could potentially let the deal, if it's going to go over 30 days since they locked, they could expire and submit a new application to relieve that cost. Or if rates went down, which would be helpful if rates went down, right? So there wouldn't be an actual cost. So I just wanted to clarify that that's actually a true statement, that there's no actual charge if a deal falls apart if there's been rate locks purchased.
Yeah, both statements there are true. The lender gave you the correct information. So obviously, the rate lock extension costs are 100% pass through. Lenders don't make anything. It goes directly forward to the investor. So it's not like there's any benefit to us for charging it. So don't ever think that the lender's making out on that deal.
Yeah. Okay.
But if the deal does not ever get closed, funded, and delivered to that investor, the investor doesn't come back looking for any of those fees. The whole thing is a
Yep.
wash. Nothing, they never boarded the loan. They never put it on their books. So the costs are just forgotten. And he is correct in saying he could completely withdraw the file. They could reapply, and then lock a 30 days later. The only thing with that is you got to be careful, because all of a sudden this seller can't perform. You try to go that route and you say, we're going to withdraw, we're going to wait out our 30 days, and then we're going to get a fresh lock, hopefully better rates, at least eliminate the extension fees. Then all of a sudden, 10 days later, we all know what happens. That seller calls up and says, I can perform, we need to close or I'm pulling the deal. And now you're in that limbo area, and now your buyer's like, well, we did all of this to get rid of those costs, and now you're forcing us to close. We want you to pay them. And so I was like, no, I'm not paying them. I'm performing.
Got it.
I just have a follow up on this, guys. My understanding, when you do a rate lock, the fees are paid when you do the rate lock extension. So how are there no fees when the deal falls apart?
So all costs associated with the lock and the rate lock go on the closing disclosure and all get paid at the time of consummation. The only time a buyer would pay for a rate lock actually out of pocket up front is if they were looking to do, a lot of times we'll have people, if they're doing new construction and they want like a 6-month rate lock. A lot of investors want an upfront premium to lock for that long-term period. But under normal locking scenarios and extensions, everything is built into the closing disclosure and collected at the time of consummation.
Okay, great. Thanks for that clarification. And Adam, was there a second piece to the question?
Yeah. Yeah. It was just a totally different scenario. So I'll give you
Okay.
the backstory, because his underwriter uncovered something that he said no one in his branch even knew about. So here's the backstory. Numbers are a little bit larger, but I'll keep it just so I get the story straight. So guy has a $6,000 a month mortgage. He's buying an $8,000 a month mortgage. He gets qualified up front that he can afford to buy without selling. Okay. So long story short, he gets his house under contract, right? And whatever it is, a couple weeks before closing, lender says, hey, you never told me that part of your, I'm summarizing here, part of your compensation got switched to variable compensation. It's only been 18 months. It hasn't been 24 months. We can't count that. Sorry, you have to sell the house in order to buy. So he says, okay, no problem. Talks to his wife. His wife says, whoa, whoa, whoa. We've got to, do a kitchen renovation. We've got to paint the whole house. What are we supposed to do for these 30 days? So basically the deal is going to fall apart because the wife doesn't want to, be in limbo for 30 days for the construction on the house they're buying. So the lender's upset because it's $1 million loan. He's like, hey, underwriter, like, anything we can do here. So they find this underwriting guideline, which is supposedly for all conventional loans, that says if you have a squeaky clean buyer, which essentially means good credit score and no items on the commitment, so not a conditional commitment, but a commitment, the bank will allow you to close on the new house and exclude your debt on the existing house, even though you haven't actually closed on it. So in this case, it resurrected this $1 million loan, and now he's going to be able to buy his new house, be in there for a couple weeks or 30 days, whatever he needs to, and then sell his house afterwards. Now, obviously there's some risk there. The buyer could, fall apart, but the whole reason the bank's willing to do it is because they're seeing this as essentially a done deal. So I'm thinking to myself, maybe you want to build in a non-refundable deposit for the, for the seller against the buyer, and put some protections in place. But I could see this coming in handy for a lot of people, because there's always that time frame where, it's funny in real estate, if you don't prep your clients, you kind of have to be moved out the day before so the buyer can do the walkthrough. And then it's like, what do you do for that night or two where your house is empty? So just kind of an interesting story, just researching guidelines and not giving up.
Yeah, so we got a comment here of just they already have a buyer for their home, Adam.
Correct. So this is a situation when you can't afford to buy without selling. But as long as you have a buyer lined up with with no conditions, or what they considered squeaky clean, I don't know what that exactly means, they'll let you buy the new house without closing on your house as long as it's going to close within 30 days.
So basically, examining the current deal that you have on your house, right? So I'm a
Mhm.
buyer, I'm buying a property. I've also got to sell my house, right? And normally we want that house to close before I can buy. And what you're saying is, hey, you know what? I can go and buy that as long as the deal that I have on my house is a paper borrower or whatever the case might be.
Yep. Yep.
Eric and Dan, I mean, that's definitely not the way I've always understood it. So I don't know if Eric, Dan, if you guys wanted to comment on this one.
Yeah, I'm just guessing here that this particular lender is probably a larger bank where they are going to service this loan internally anyway. So they can kind of bend their own rules, bend the lending rules, because they're taking the risk. They're not trying to, it being, probably $1 million loan, that's above Fannie Mae limits anyway. So it's not something that has to be delivered to Fannie or Freddie. So they can kind of make their own rules as they go, because they're taking all the risk on that particular deal. They're going to service it for the 30 years. So it sounds like more of an internal bank option more than a standard guideline that they were able to go pull out of Fannie Mae or Freddie Mac.
I'll have to clarify this normal everyday conventional deal, because I want to share it with the group, because I could think of 1,000 situations where this makes sense. And he gave me the impression it was a traditional guideline, but he's like, I've been doing this forever. No one in my office has even heard of this guideline. And so now he's aware of it and shared it with me. So I'll get more details and maybe bring it up next Friday just to confirm that's the case.
If he found it somewhere in that 800-page book from Fannie Mae, I would love to see it, because I'll throw it at my underwriters every day, left and right, going forward.
Well, it's funny you say that, because isn't there legitimately a big fat book that you have to go through to find this stuff? And he's like, yeah, that's exactly right. Because I remember when Peter was with Semper, it was the same thing. He's like, dude, I found this guideline that no one else wants to take the time to read. So I'll confirm it for you and bring it back for next week.
Yeah, that'd be awesome. I'd love to see it.
Adam, is all they need is the clear to close from that buyer, or you said they also need to see that they have a high credit score? How are they getting all that?
So it wasn't even a clear to close, because I asked him that. He said it was a no. I mean, I guess maybe it's essentially the same thing, but he said, a lot of times a lender will give a commitment right early on in the process, and it's got 30 items that actually need to happen for it to be committed. So he said it needs to be a commitment with no conditions, essentially, and a high credit score. So I'm assuming they're working with the buyer, because they would have to go tell the buyer, hey, we can't sell your house because we can't buy. So in this situation, the buyer wants to help out too, so they can buy his house. So I will, in addition to confirming that it applies to traditional conventional loans, I will confirm what squeaky clean means and what information needed to be submitted to prove that his buyer and his house was, ready to go.
Chris, go ahead.
So obviously they don't need the funds to close on their house to buy the new house. It's just because whatever the one little thing they found on them purchasing, they now have to sell in order to buy. But it's not really a financial thing. It's more of a terms thing, Adam. Is that what it is, obviously?
It's a debt to income thing. So you've got
Okay.
6,000 and 8,000 versus just 8,000. Now his variable compensation, that it can't get qualified because it hasn't been 24 months, doesn't matter, because you don't need that to qualify for just the 8,000.
Gotcha.
Yep.
Yeah,
So
so
obviously wealthy person.
Yeah. So normally, though, that this person would not have been able to do this because of the fact that their house didn't close and he wasn't able to relieve the initial or the initial $6,000. Right. That's what you're saying.
Exactly. Yep.
Yeah. So now you have on the books 6,000 and 8,000. Can't afford to do that, but we're willing to do it because we believe that 6,000 is going to drop off in the next 30 days because we've got this squeaky clean deal over here on your house.
Yeah, and the numbers could be 1,000 and 2,000. It doesn't have to
Yep.
be those big numbers. I
Right.
just didn't want to get myself confused. But
Yep.
yeah, I'll report back because I specifically asked him, is this going to work for your everyday conventional loan? And he said, yes, it's in that big fat book that Eric was talking about, and no one knows about it. So, and I've had that happen too. I mean, the first Airbnb I bought, no one could get it done because it was a seasonal property with seasonal water. They literally come and take the water out, the water meter out, so I physically don't have water at the property. And there was a private road too. So I don't know what he did, but he was able to get through some different guidelines. And he's like, dude, I just spent like 6 hours in this stupid book, got the guidelines to the underwriter, and we can get this seasonal property done as a second home, so, or as an investment property. So yeah, it's just pushing sometimes to just make sure every stone has been unturned.
Anybody else have a follow-up on this or just another question for Dan or Eric?
Could you repeat the last part? I didn't understood what he said.
Romani, he was just talking about a separate deal that he had where the lender was just pushing different guidelines to try and figure it out, you know, and one lender is saying we can't do this, underwriter is saying we can't do this, but finding a guideline that maybe isn't used that often, referenced that often to say, hey, wait a second, we can get this deal to push through based on this guideline. Right. And so I think that's the problem when you are talking about your local bank or your online lender versus having a preferred lender that this is all they do. Right. You're going to get denials. You're going to get bad fact checking up front, bad document collecting up front. All right. But having a preferred lender that's going to go through the book, that's going to find the guideline, that's going to make the deal happen. That's what we've got to have. You know, being a real estate resource, you know, being that top level agent, you got to have partners that will do this. We can't be expected to understand all the mortgage guidelines, right? And so a lot of times as an agent, we get, oh, it was denied, you know, and I think a low level agent is going to turn around and say, oh, sorry, Mr. Buyer, I guess we can't do the deal. A top agent is going to say, no, let's get this to my guy. I want it right. And I want them to take a look at this. I want to see if they can change your financials around. I want to see if they can get you to pay off this loan or pay that down, or see if I can find a guideline. Hey, you were buying this as a, you know, seasonal property. If we did it as an investment property, we recategorized what we're purchasing. We can finagle these things to get a deal through. Right. And so collecting, and this is the problem, you know, that agents, you got to be able to have these conversations with your buyers when they say, oh, geez, your lender wants all these documents. Man, the other guy he just said he'll pull my credit score and ask me for a bank stub. I want to go with the other guy. It just seems easier. Well, it's easy because they're not doing all the work up front, and then you get into the deal and then it's going to fall apart. So, having somebody that's going to go the extra mile, that's going to, you know, work with the underwriter to figure out how do we push this deal through. Yeah. And doing this right off the bat, I can't tell you how important it is when your buyer says, you know what, I don't want to get pre-approved now because we're not going to be buying for 6 months. Beautiful. Thank you. 6 months. We got all that time to prep your financials. Let's get you over to the lender now. Let's have them pull everything. Let's get all your documents in, right? Not just to get you pre-approved, but maybe we're going to put a plan in place that says, hey, great. I'm glad we found out about this now. 6 months from now, we're going to be able to get your credit score up to this by having you do X, Y, and Z. Now you're going to qualify for this better program. It's going to save you $100 or $200 a month. But a newer agent that's not willing to drive the bus is going to say, okay, yeah, don't worry about it. We'll get you pre-approved later. Right? This is the difference between the pros and the rookies who aren't doing this. Have the preferred, drive the bus, know that it's in everybody's best interest to go talk to the lender now. Who else has got something? We got a few minutes left. Any other follow-ups for Dan or Eric, or just a good experience share around driving the bus, pushing on guidelines, getting people pre-approved way ahead of time? Anybody have a share around this?
Hey, Steve, I got something here. It'll be a little bit long-winded, but bear with me, guys. This is something you might be able to go find a nugget that was kind of laying there mid last year or late last year that didn't quite qualify for what they wanted. So we've all had that client who, they had to go FHA, maybe their credit wasn't perfect. And then they go in, they try to get pre-approved. Excuse me. And they don't quite maybe get to the number that they wanted or that they need, or whatever the region is. Maybe they got pre-approved for 300 and they really needed 325, 330 for the region that they live in. It's just there's not a lot of inventory at the price point. So FHA does something really weird when they're calculating income. They utilize for overtime and bonus the prior 2 years. So when we're in like August of 24, they're going to use 22 and 23 overtime and bonus and divide those as an average. We all know, that person probably got a raise in March. Maybe they got a dollar raise and their overtime was much higher in 24. And we're like, even the client's like, I feel like I'm making way more money than I used to. I can't believe I only qualified for that 300. Well, here we are. It's January 2025 now. We get to throw 2022 in the trash. So a lot of people were making less money in 22. Incomes have gone up a lot more in 23 and 24. People got raises, things like that. A lot of, employers had to give raises just to keep their workforce. So I've seen it work out many times where all of a sudden we relook at everything in January, February of 25. And now because we're using 23 and 24 averages, we got a little more income. We've also been seeing the rates go down a little bit. Now all of a sudden, maybe we pick up $20,000, $30,000 in buying power. So think about that client that in 2024 that went through the process, whether it was with us or with another lender, and they didn't quite get to where they wanted to be or needed to be. It's worth another look. Reach out to them this weekend. You might find that nugget. Be like, hey, what have you done? Has everything, continued good? Maybe they got another raise at work. These are really good opportunities. You already have a relationship with them. They already like you. They already trust you. You already worked with them. You just didn't get to the finish line. Let's revive all those people this weekend and bring them back and get them a second look if they were with another lender, or alert us. Hey, you guys worked on this 6 months ago. They're still looking to go. Why don't you update their stuff? See if we can get a little higher.
Yeah, I mean, that's a great share, Eric. The difference, if you're talking 10%, you're in a $300,000 house or 330, that's a world of difference of what you're going to get. I mean, a 10% change in most markets, like the buyers, that's why you got to be careful as a buyer's agent. If you show them the 330s and all of a sudden then you got to take them to 300s, they can get discouraged. I think 10% is kind of that number there that, man, like that really makes a difference in what I'm looking at. So good little nugget to end on. Appreciate you guys jumping on Fridays and making this knowledge-based gold stuff that we can actually put into play. Let me just get my screen share up. Only one training available today, guys, the Thriving Buyer's Agent. These times, just keep in mind, these times are not in Eastern, so you got to add 3 hours. So anybody that wants to take a training tonight at 6, have at it. Come back and report back to us on Monday. Other than that, go have yourselves a great weekend. Take some of the nuggets that we talked about. Talk to your buyers. Get them looking at properties. Get them pre-approved as early as possible. And let's chat about it all again on Monday. Appreciate you. Have a great weekend.
Thank you.